Proterra is North America's #1 EV original bus manufacturer. It has over a decade of experience in the industry. The California-based firm also develops EV charging infrastructure. Proterra is to combine with ArcLight Clean Transition Corporation, ticker symbol ACTC, which is a special purpose acquisition company with $278 million held in trust. ArcLight has done due diligence on Proterra, including reviews of its strategy in all business units, multiple visits to its factories in Burlingame and Los Angeles, an independent review of its battery technology by the Battery Lab. So this is not an out-of-the-blue SPAC, but a company with a decade of experience looking for the growth in the EV sector. In this video, we will take an in-depth look at the company background of Proterra and its product offerings. We will look at the investors who are behind the transaction. Shamat Palhapitiya, who is touted as the next Warren Buffett, has led the PIPE round and called this as his investment in the future of green technologies. We will also look at the merger transaction details and the share structure of the company. Finally, we will try to come up with a valuation for the company, including a best case scenario and a conservative scenario. So please stay for the whole video to find out all the details about this exciting EV SPAC to make debut for retail investors. Hi, this is Arshad Ahmed, founder of DIYstockpicker.com, an investment portal dedicated to help investors make intelligent decisions. This video is for information purposes, and please do your due diligence before making any investment decisions. If you are new here, please hit the subscribe button. Every week, I will be releasing videos on EV stocks and growth stocks. Proterra was founded by Dale Hill in Golden, Colorado in 2004. By 2013, the company sold more than 50 EV buses. The company also has an autonomous bus program at the University of Nevada. In 2017, the Proterra Catalyst bus set a world record by driving 1,100 miles on a single charge. The company has landed contracts with federal agencies, schools, airports, and big bus transit companies. In 2018, Daimler, which is the world's largest commercial vehicle manufacturer, made an investment in Proterra. Proterra later started navigating into manufacturing electric powertrains, the business that Excel Fleet is into. It also navigated into the business of EV charging infrastructure, like ChargePoint and Blink. The company also has a battery leasing program like Romeo and QuantumScape. In a nutshell, the growth has been tremendous with innovation leading the way. The following are the key highlights. 130 plus communities in 43 states and provinces chose Proterra. 1,000 plus buses are on the road with a 50% EV bus market share. 16 million real-world service miles. $193 million of 2020 expected revenue. 54 megawatt charging infrastructure. Over a decade of experience with 350,000 square feet of advanced manufacturing facility. Daimler is the world's largest commercial vehicle manufacturer with $50 billion in annual sales and more than 500,000 vehicles sold. In September 2018, Daimler led an investment in Proterra. Daimler is also the anchor investment in the current $415 million PIPE. This provides validations for Proterra's technology and provides huge partnership opportunities. There are sizable commercial agreements to deliver more than 500,000 electric powertrains for commercial vehicles. Proterra has three main businesses. Proterra Transit is North America's #1 EV bus original equipment manufacturer and services transit companies. The transit industry is rapidly transitioning to battery electric vehicles, with more and more cities across the continent making commitments to 100% zero-emission transportation. Purpose-built to be electric, the Proterra ZX5 bus enables transit agencies to significantly reduce operating costs while delivering clean, quiet transportation to local communities across North America. With the greatest range and efficiency of any battery electric bus, the ZX5 is designed to serve the daily mileage needs of nearly every transit route on a single charge. Proterra Energy has two sub-businesses. The first is the EV charging infrastructure. The EV charging infrastructure market is expected to grow to $37 billion by the end of the decade. Proterra has already installed 450 megawatts of charging infrastructure at 450 plus locations. This is what ChargePoint and Blink are trying to dominate. Proterra has a complete lifecycle solution in place. They assist the depots in installing the charging infrastructure and also provide a software interface where fleet managers can monitor their vehicles for the remaining charge and charge the vehicles appropriately. The other business is Proterra batteries. These batteries are purpose-built for commercial applications in heavy-duty and medium-duty vehicles. The batteries are built from the cell-up at the manufacturing facility in California. There are two series of batteries, the S series and the H series. These batteries are designed for maximum safety and preventing fire hazards. The batteries follow a modular design. The components can be easily separated for recycling. This results in less wastage. Proterra has also partnered with recycling companies so that the batteries do not generate an environment waste at the end of their life cycle. The third business is Proterra Powered, which is supplying drivetrains for commercial electric vehicles. Proterra has a huge experience with building drivetrains, and currently their drivetrains power the Proterra buses. The company has used this advantage and is looking to partner with commercial EV original equipment manufacturers so that when the OEMs manufacture the vehicles, they can fit Proterra's drivetrains onto them, and later the upfitters can fit the body onto that. Let's take a look at the merger transaction details. Pro forma equity value of approximately $1.6 billion, $852 million cash on the balance sheet to fund the growth. Transaction includes $278 million of cash held in trust and $415 million of PIPE financing. The deal is expected to close in the first quarter of 2021. Now a look at the share structure. 240 million shares outstanding, 11.6% ArcLight public shareholders, 2.6% ArcLight founder shares, 17.3% PIPE investor shares, 68.6% existing Proterra shareholders. Before we come up with our own valuation, let's take a look at what Shamat has said. Shamat Palhapitiya is a venture capitalist, engineer, and founder of Social Capital. He was a senior executive at Facebook between 2007 and 2011. Shamat is looking to democratize the IPO process and has successfully launched 3 SPACs: IPOA that has merged with Virgin Galactic Holdings, IPOB that has merged with OpenDoor, and IPOC which has merged with Clover Health. He has registered all the way until IPOZ. Shamat appeared on CNBC and argued that the world's richest person should be the one who is fighting for climate change. On Twitter, he gave a one-page investment thesis for his investment in Proterra. He has led the PIPE investment founding. I went through that and it's an interesting read. He has listed both the qualitative and the quantitative aspects for his investment. First, he argued Americans are increasingly using public transport, taking over 9.9 billion trips in 2019. Palhapitiya also noted Proterra's first mover advantage. The company has sold over 1,000 commercial electric vehicles in North America, representing 50% market share. Finally, he mentioned the decline in EV battery costs since 2010 of over 85%. Proterra's impressive compound annual growth rate of 68%, 750 million in current orders and backlogs at Proterra are the drivers of his biggest investment in climate change. One thing to note here is that Palhapitiya got these shares at $10 a share. While I speak today of this video, the shares are trading at $26 per share. So already there is a 2.5x that happened in the market. Now let's try to come up with our own valuation for the Proterra stock. The 2025 expected revenue is $2.566 billion and the EBITDA is expected to be $539 million. If we assume that the market will price it at a 15x multiple of the EBITDA, the valuation of the company would be around $8 billion. The shares outstanding are 240 million. Divide 8 billion valuation by 240 million shares outstanding. That gives a valuation of $33 per share by 2025. There are a few business risks involved in investing in this transaction. Proterra has multiple businesses going. In the Proterra Transit, it's the undisputed leader. But on the Proterra Energy side, it's competing with ChargePoint, Blink, QuantumScape and Romeo Power. And on the Proterra Powered side, it's competing with Excel Fleet. Its competitors are well-funded companies with strong balance sheets from the cash infused from their SPAC transactions. So it will be interesting to see how Proterra would be able to wrest the market share from these well-funded companies. There is always the risk of the merger not going through, but I don't think it's likely in this case because of the big short investors involved in the PIPE transaction. The biggest risk I see in this stock is the growth story has already been priced to a max in the transaction. Like we've seen the valuation, it comes to about $33 per share in 2025. But the way the market is looking at it is the market is ready to pay the future growth price on this current date. Any future market contractions may have an impact on the share price. I hope you found the video informational. I have analyzed the Excel fleet stock, which you shall see here on the end screen, and I hope to see you in that video. Thanks for watching.